Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Yesterday, the stock market experienced a decline of 1.58% in the S&P 500, while the dollar index rose by 0.83%. The yield on 5-year US government bonds dropped from 4.27 on Monday to 4.05%. This market movement was triggered by Donald Trump's decision to enforce the previously announced 25% tariffs on Canada and Mexico, due to their failure to comply with a one-month corrective period aimed at curbing drug transit, as well as an additional 10% tariff on Chinese goods. The initial market shock occurred on February 20, when U.S. Secretary of Defense Pete Hegseth approved Trump's plan to cut the defense budget by 8% over 5 years. On that day, the S&P 500 fell by 0.43%, although the euro unexpectedly increased. Currently, the euro faces a critical downward target at 1.0350. If this support level breaks, it could lead to a decline toward 1.0280, represented by the MACD line. It's a blue line on the graphic. Following that, we anticipate a further drop to 1.0135. The Marlin oscillator signal line has firmly entered the downtrend territory, exerting downward pressure on the price. On the 4-hour chart, the overall trend remains bearish. The price is currently trading below both indicator lines, and the Marlin oscillator is gaining strength within the bearish zone. At the 1.0350 level, the Marlin may experience a slight slowdown in its decline. However, it is still far from the oversold zone. A brief pause might occur before attempting to reach the next significant target at 1.0280, with a correction expected from the 1.0350 level. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 70 pips, which is considered as average for this currency pair. On Friday, February 28, we expect the pair to move between 1.2555 and 26.95. The long-term regression channel remains downward, signaling a bearish trend. The CCI technical indicator entered the overbought zone on last Friday, warning of a potential decline. A bearish divergence may also be forming. The GBPUSD currency pair maintains a medium-term downtrend. We still do not consider long positions, as we believe the current upward movement is just a correction. If you trade purely on technical analysis, long positions are possible with targets at 1.2695 and 27.56. If the price is above the moving average line, it's a sign line on a graphic. However, sell orders remain much more relevant now, with targets at 1.2207 and 21.46, as the upward correction on the daily time frame will inevitably end. The British pound currently appears luckily overbought, but it has not yet been able to begin a decline. That's all for today. Wish you best of luck.